Legal & General is a familiar name for UK dividend investors, and many of my UK friends have this company within their portfolios. But why is it so popular, and should you have it in your portfolio? In today's video, I will try and explain why I think Legal & General is a good stock to have for the dividend investor. I'll be looking a little bit at their history, their dividend yield, and their dividend safety. So stick around and we will see whether Legal & General deserves a spot in your portfolio and if it can help supercharge your dividends. See you on the inside. Legal & General are a financial services company that provide a range of products and services including life insurance, pension investments and general insurance. The company was established in 1836 and has since grown to be one of the largest insurance and investment management companies in the UK, and they currently sit with around £1.2 trillion in assets under management, and a third of this is actually based overseas. They serve both individuals and businesses, and they operate in several countries throughout the world. The company is known for its strong financial stability and its commitment to long-term investments that support the growth of the global economy and has a reputation for providing reliable financial products and services. And you can see that in the performance over time, where we can see pretty much all attributes increasing at an impressive rate since 2011. Operating profit from all the divisions has over doubled since 2011 at a compounded annual growth rate of around 9%. Earnings per share and dividend per share has grown at a compounded annual growth rate of 11% each, and you can see that their book value per share has grown at 8% compounded. Their most profitable division is their pension risk transfer business, which in 2022 accounted for nearly 50% of the company's operating profits. So this is where institutions choose to offload some or all of their pension plan risk to insurance companies via a new. The company talks about 6 global growth drivers that are responsible for driving long-term growth for its investors, its employees, and also its customers. But really, I think the first one, the aging demographics one, is the most important one, particularly when we talk about the pension risk transfer business that accounts for most of their operating profit. You can see that they aim to be global leaders in pension de-risking, and they're also starting to branch out to the US, where they are saying now that their business model is now being replicated by their US asset peers, which is quite interesting. And I assume that they mean someone like BlackRock, because they compare themselves to BlackRock in terms of performance, and they are stating that their performance is not being reflected in their valuation when you compare them to someone like BlackRock. So if you have a look here, you can see operating profit that I spoke about earlier has grown at a compounded annual growth rate of 8% for Legal & General, and over the same period it has grown at 6% for BlackRock. Earnings per share grew at 11% for Legal & General compared to 10% of BlackRock, and dividend per share actually grew more for BlackRock, which is 12% on a compounded basis compared to 11% of Legal & General. But certainly when you look at the performance of the two, you can certainly make a case to say that Legal & General do look more undervalued when you compare them specifically to BlackRock. So as one of the largest asset managers in the world, they also have a really high starting dividend yield of over 7% at the time of making this video. The company themselves give a compelling investment case, particularly for those long-term investors, and they actually have a very long duration here of 30 to 40 years. But as we have seen, they have a proven track record when it comes to increasing its earnings per share and its dividend per share. They also believe that their increasingly international growth orientated business is driving in and around 20% return on equity. But the question is, will their dividend continue to grow? You can see that in point 4, they are talking about a robust and resilient balance sheet. And in point 6 here, they also are talking about an attractive annual growth in the dividend. So certainly does look like that they take the dividend very seriously, and there is a high possibility that this will continue to grow over time. So let's take a look at the fun stuff. Dividends. That's what we're all about here on this channel. At the time of recording, Legal & General have an attractive dividend yield of around 7.62%. This is higher than it has been typically over the last 5 to 6 years, where we're used to seeing yields of around 5 to 6%. This yield is also higher than the industry average, which stands at around 4.2-4.3%, and it's higher than the market's top 25 companies, which stand at 5.6%. They also have an impressive dividend growth record. However, you can see the consecutive annual increases only stands at 1, and that is because they kept the dividend flat during the pandemic in 2020. But management has given a target of around 3 to 6% annual growth over the next 3 to 4 years, which fits in with what they've been doing over the last 5 years. This is a little bit lower than their historical 10-year average because they are reinvesting back into the business to try and accelerate that growth and expansion into more of the US and European markets, and to build a little bit of a presence also in Japan and China. But I feel that when they establish their presence, there is no reason why we won't see them going back to their historical average of around 7 to 9% dividend growth. It is important to note that the company has recently changed its dividend policy, and the board has approved that the dividend policy will no longer be reporting to net release from operations under IFRS 17, which is basically a new accounting standard for insurance contracts. Instead, they're going to focus on net release from operations with capital generation and adjusted operating profit. So with that in mind, it's good to look at how they are performing in terms of their own ambitions, and you can see that currently they have a cash generation that stands at about 5.1 billion and capital generation which stands at around 4.9 billion, and they've seen 14% and 10% respectively growth in both of those. That bodes well for their dividends, and as you can see, their dividends are well covered, and they have even recently declared that they aim to grow this dividend by 5% out to financial year 2024. Companies with such high dividend yields are often considered to be vulnerable to dividend cuts, maybe because they can't afford a dividend or that the company is in a little bit of trouble. But I don't think this is the case for Legal & General. Although profits have taken a little bit of a hit in 2020, they have recovered quite nicely, and their dividend payout ratio is easily covered at around 65%. Also, if you look at their balance sheet, you can see that they've got strong solvency coverage ratio of around 236%, and they have a solvency surplus of about 9.9 billion. So I honestly do not think that this company's dividend is vulnerable, and they have even committed to increasing this by 5% in 2024. I think management have proven that they are committed to this dividend. They have demonstrated no cuts. Even in 2020 they held it straight, even on the back of the advice of Bank of England, which advised financial firms to suspend their dividend. They had already went ahead with their 1 billion planned dividend payment. So I think that they do really commit to this dividend. I think the dividend is safe. I think it's a strong company. It has good growth potentials, and it is a company, full disclaimer, that I have been buying and will be buying more of over the next couple of months. It has a strong dividend yield, a really good dividend growth track record, and with that, I think this company deserves a place in my portfolio. I would love to hear your thoughts on the company if you own Legal & General. I know there are some risks about the bond portfolio, which I did not talk about. So I'd love to hear your comments on the company. Are you buying them? Are you staying away from them? What do you think of their dividend yield? Please let me know in the comments. I would love to hear from you all, and we will see you all soon.